Hello, I'm Rupert Verco, CEO and Managing Director of Cobra Resources. We're listed on the main market of the London Stock Exchange. We have assets in South Australia, a Tier 1 jurisdiction. We have grown and developed a gold and dual rare earth resource. And today we're going to be talking to Matt Gordon about our new discovery of Boland, where we've just defined ionic rare earth mineralization in a very unique geological setting that's amenable to in situ recoveries, which gives us a massive opportunity, and we're really excited to progress that from this point.
Rupert, good morning to you, sir. You are soon coming to our sunny shores, and I'm departing them. No correlation in that. But I'm just speaking. I was hoping to speak to you face to face, but unfortunately, I haven't quite been able to make it work. Right, good to meet you. The first time we've met or spoken online. So, could you do me a favor? Give me a little bit of background on you. What's your background? What have you done? Where have you had success?
Sure, Matt. Well, thanks for having me. Look, I'm a geologist. My background is fairly broad. I've worked in exploration. I've worked in uranium ISR work before, and then migrated into hard rock prime. Most of my time in gold, focused on operational, into my management, and then migrated from there into consulting, high-level business consulting in resources and operations. And I've spent the last 2 years with Cobra Resources, where we've been advancing the Wudinna Project in South Australia.
Right, okay, but it's like, as you say, you kind of got a kind of dual track there, gold, rare earths. Again, not much correlation there either. So what's the focus? Okay,
so for us at present, we've defined this 279,000 ounce gold resource. We've been looking at the rare earth market and what the opportunity with rare earths are. And really, Matt, the opportunity with rare earths is diversification in supply, ensuring sustainable supply of rare earths to markets outside of China. So reducing that geopolitical risk. And the important component of that is the right style of mineralization, and the news we've released this week is demonstrating we have that, and we have that in a unique environment. So that is going to be the migratory point for us, where we'll look at what we do with our gold assets, because there's certainly plenty of value there, particularly the unique nature of the clay-hosted resource over the top of it. But the Boland discovery represents a significant opportunity for our company.
Right, okay, so if you don't mind, I'm going to compartmentalize that. Okay, the gold, it's not a lot of gold for you, so you've got a choice. You can say, I'm going to throw more money at that thing and try and get a resource of plus 1 million ounces. You know, in fact, these days, it's got to be plus 2 million ounces, I think, to be of interest. Are you planning to throw money at that, or do you monetize it in another way?
Good question. Look, the gold asset is very shallow, and there are other projects regionally that are more advanced than us that present as opportunities for us to monetize it or bring forward commercialization. And we're certainly looking at what our opportunities are there.
Right. Okay. I think I'm going to read between the lines on that one. As you say, because you either got to say, we can create some kind of quick cash event there, sale, or we can take a shallow resource with maybe, and I don't know what the metallurgy is, and I don't know if it's heap leach, I don't know anything about it, and try and monetize some kind of cash stream, annuity stream there. Have you done any work on trying to understand that, or are you just looking around, I say, regionally and say?
Well, look, Matt, our focus to date has really been around growing the resource. We've done that in a relatively cost-efficient manner, but now, to get the best value out of that resource, we really need to look at what the best commercial outcomes are. So look at whether or not that's a toll treatment option with a third party processing our ore, a sale, or a carried interest, for example. So we'll certainly explore those outcomes and try and come up with the best option for shareholders.
Okay, so it may have some future monetary value, but right now it feels like you're excited about the rare earths component. So tell us what you've got there. What do you know about what you've got today?
Okay, so the MET testing that we've recently released demonstrates two things. One, we have ionic rare earth mineralization, which is something that only a handful of companies have been able to demonstrate in Australia. And the benefit of that is the simplistic nature of the leaching process. So to put it into context, Matt, we're using acidities that are the same as orange juice to be able to extract that from the clays. And most interestingly for us is the geological setting that these rare earths are in is we don't need to blast, we don't need to load and haul. We can potentially in situ recover them through putting in relatively benign lixiviants into the ground and extracting them back out. So that really is the most unique and enabling opportunity for us to provide a really sustainable and integratable mining process at Wudinna.
Well, potentially unconventional or certainly unknown. So we've heard about ISL or ISR in the context of uranium. About 50% of the global market uses that technique. I've even heard it with people trying to attempt it with copper. But what leads you to believe that you can do it here with this type of deposit?
So these rare earths that we have announced these recoveries on, they're occurring at discrete changes in chemistry, and those chemistry boundaries are between really permeable aquifer sands in an old river system, and then the rare earths occur in the clays that occur in bands within that river system. So through this desorption metallurgical process, we can ion exchange those rare earths out in a very environmentally friendly manner. And we believe that we'll get the right hydrology components, so flow rates through the system, that'll make it very cost effective.
Right. And have you got experience in doing that?
Yes. So between myself, David Clark, another director, and Robert Blythman, our exploration manager, we've all worked in ISR uranium previously, and we're all experienced in bringing those projects into development.
Okay, well, tell me more, because I think there's obviously clearly a very, very important part of this in terms of your your ability to plan it,
sure,
do it, and recover those rare earths. Tell me more.
Robert, David Clark, we'll start with him. David is a legend of South Australian mining. He actually drilled the discovery hole at Beverley. He still, to this day, kicks himself for missing 4 Mile. And in terms of successful mines, Heathgate is still successfully leaching the Beverley and 4 Mile uranium mines. Myself, I spent 2.5 years early on in my career bringing the Honeymoon uranium mine into production and doing resource drill out work at Gould's Dam. And Robert Blythman has spent a number of years with Heathgate in production and exploration as well. So we're very familiar with the requirements and the way to advance from discovery and bringing the right data requirements and testing requirements along with that exploration work to be able to commercialise it.
Right, and you talked earlier about orange juice type level of acidity. So obviously that sounds better than, the usual kind of acid required on projects to kind of make recovery. So how do you know that? Has some work been done, or are you bringing that knowledge in from elsewhere?
Sure. So ANSTO, the beauty, so everyone is trying to get very cost-effective extraction metrics from rare earths. ANSTO are a global leader in rare earth metallurgy, and we've announced results from ANSTO that have demonstrated we're getting recoveries of up to 65% heavy rare earths and 58% magnet rare earths, which is where the majority of your value is in the suite of lanthanides, at an acidity of pH 3, which is the same as orange juice or red wine, and that is occurring within 6 hours. So it's a very rapid desorption process. And when we're talking about how much acid it's taking to do that, it's very low. So the most important thing is the acid consumption through that process is calculated to be minimal, and that's very, very positive. And when we think about that in terms of applying it to an ISR process, what the benefit is groundwater already sits at a pH of 5. So we're only taking it from a pH of 5 to a pH of 3, whereas compared to in uranium, where you're taking it maybe from 6 or 7 all the way down to pH of 1, the amount of acid required to do that is far less, and it's far more environmentally less impactful and therefore more sustainable. So we see there's a number of benefits to this new geological model.
Right. Okay. So let's talk about the plan then. Okay. You picked. So actually, where did you pick this asset up from? I mean, how do you get to understand as much as you know today?
So, Matt, when we first started looking at rare earths and what the opportunity was, we focused on defining a resource that's complementary to our gold. So it overlies the gold. So we see significant value in that you can effectively carry a mining cost on the gold metrics to output rare earths, and that gives you a competitive advantage to clay-hosted material. With our saprolite clay-hosted rare earths, our recoveries are around 35% magnet rare earths at a pH of 1. So not as cost-effective as what we've defined at Boland, but what was important about that, Matt, is we saw the opportunity in the market was to understand the mineralogy, the mobility of rare earths in the system, and what's required to retain ionic rare earths. So we went on this very technical journey and tried to understand what requirements we needed in our system to be able to define these easily extractable rare earths. And that led us to looking at these paleo systems, and in particular Boland. And I suppose in the space of 3 months, we've gone from exploration concept to drill confirmation, now metallurgical confirmation. So we've demonstrated that concept. So now it's up to us to advance that in both the mining concept and demonstrate scale.
Right. Okay. Well, let's get on to the plan here, because I think rare earths has been through a difficult few years in the sense that it's very much seen as a Chinese thing. You know, they control so much of the market. They have all of the technical know-how. They have had the money to throw at it, and the West's now desire to kind of obviously, or the understanding that it's a critical mineral, and the West's desire to kind of control our supply chain is a little bit more known now. You are going to have to work out how you insert yourself into that ecosystem in the West, or you're going to have to be realistic and say, well, maybe China needs to be involved in that supply chain somewhere or somehow. So what is the plan for you guys? How do you move this thing forward? What is your strategy for doing that?
So that's good question. It's something that we're very conscious of, and we've certainly started that negotiation or that discussion piece with potential off-takers, companies with defined rare earth processing facilities and contracts into America as well, as a potential source of off-take. So we see that there's commercial value in us being able to define those relationships and demonstrate those potential commercial outcomes from a very early basis point. And I think what's great from our perspective is they're already listening to us due to our sustainable criteria and our unique value prospect from an ISR point. Because from an industry perspective, there aren't any other projects currently pushing that, and that's due to our unique geological model.
Right, and that's lovely, but money talks, right? So you're going to have to work out how you finance this, how you go from where you are today to where you want to be, and it's quite clear as geopolitics is coming into play here. It's like, I think from the US point of view, North America's point of view, if you involve China anywhere in that supply chain, you're not getting money out of the US, right? So you've got to work out very quick. And it doesn't matter which route you go, but there are some rules starting to be established here. So for a London-listed company with an Aussie assets run with a team in Australia, where are you looking in terms of your near-term requirements for capital, and indeed, therefore and would that influence the way that you go about developing this out? Is it, pure DSO, or are you going to try and move up the food chain? How do you play it?
Well, look, Matt, obviously being an exploration company pre-revenue, we're going to be going back to the market at some point to raise capital to advance this. We're pretty confident that due to the strength of these results, we're not going to have too many problems getting the right interest that we need. I think the important component for us going forward, though, Matt, is to identify the right cornerstones and the right people who understand this story from an early point and will be with us through those testing periods. The beauty of this is we've defined the metallurgical components, which is the most challenging bit in rare earths, at a very early point. So now we've got lots of the good components to come in terms of resource expansion. We think that this is a regional scale opportunity in terms of hundreds of millions of tonnes. And as such, we've picked up more ground to demonstrate that. And we can do that really cost effectively. So in the short term, we'll be looking to execute a plan that will focus on, one, demonstrating the ISR criteria. So that's going to be drilling core holes to better understand the mineralogy and the permeability, installing monitoring wells, get the right baseline data to understand our hydrology, and that will enable us in the jurisdiction that we're operating to bring a pilot scale test on without having to go through the mining approval process. So that's a significant jurisdiction advantage that we really want to capitalise on and try and do it in a very short time frame.
So does that give you, because there's lots of new models being kind of created out there, because the market's been really difficult for everyone across the board, irrespective of the commodity. It's been risk off. And we've seen people, change commodity. I'm a gold company one day, I'm a lithium company the next, or a rare earth company the next, and that's fine. Look at Azure. You've got companies that said, well, we're going to drill the heck out of this thing and get scale, change their minds and say, well, actually, what we need to do is get into kind of cash flowing situations. We're going to reduce the size of this project and therefore the capex of this project and do it that way, and so on and so on. We've seen it all changing here. Do you think your project, as you've just described, is as simple as saying, right, we'll demonstrate the metallurgy in terms of not just in terms of the leachability, but the recovery component of that, and then maybe it is just a scale play. We'll show we've got lots of it, and it's here, and it's NdPr rich, so therefore it's of high value, and that would be the best allocation of your capital, best return on investment from you. Or how do you see the return on the capital invested with the money that you're going to be raising? Matt,
I think we can be quite smart with what we raise in this opportunity. I think what's important for us is, yes, scale is important from an offtake perspective, but it's relatively cheap to drill. Like we're talking 30, 40 meters in this paleo system, and we're talking about air core drilling. So we can do quite a lot of that for not significant quantities of cash. What we're also very keen to focus on through some partnerships with technical groups is to look at the value add opportunities that we can demonstrate at the mine gate. So whether or not this is looking at separating out rare earth streams through simplistic processes. And the reason why we can look at that, Matt, is because of the simplicity of our metallurgy. So that's an important component, but it's also an important enabler for us to look at value add opportunities as well.
Yeah, but what I'm trying to work out is, are you going to try and make that your responsibility, or do you need to take it to a certain point as an explorer and say, hey, partner, come in here and either have all of it or give us the money to kind of allow us to take it through to another point of interest for them? So, do you know what I mean? Because companies come in, exploration companies come in here and they talk the game over, we're going to get this thing into production in 5 years or whatever. There's a lot of phases to go through, a lot of things that need to go right to get there. But what are you saying to your current shareholders anymore, or anyone new looking at this? What precisely am I buying into?
I think, Matt, couple of things. So my background is bringing resources into operation, and that's what I enjoy. Certainly, as a board, we have a track record in that. We feel like we have the right skill sets, and because this is a unique component and a new style of mineralization, I think we're hopefully best placed to be able to capitalise on that opportunity. What I see is where we need to manage our time most effectively is you need to outsource and identify capabilities that can help assist you get to your end goal. So that's what we're currently looking for, is we're looking for the right partners that can give us the right credentials to help look at those value add options and define the right flow sheet that maximises the value of this asset. So look, we hope.
What does that mean? But say that in English, because for people there's a lot of buzzwords in there. But what does that actually mean?
Looking to form technical partnerships to define certain outcomes through mineral processing. So, looking at separating light and heavy rare earths, looking at managing dissolution of gangue elements, looking at value add outcomes. Can we make our own acid from the organic sulfides in the ground? Can we produce potable water that benefits the community? Things like that. So there's plenty of opportunities that we can see here that can sustain a very cost-effective operation.
So partnerships that can deliver not just money, but know-how. Some of that sounds very specific, to you, to where you are. What and you mentioned something that water is always a tricky one with water tables and obviously social license, etc. What are the kind of barriers for you in terms of moving this forward quickly? In terms of whether it be what are the barriers?
Good question. Look, we're fortunate in that we have great relationships with our landholders. We've engaged them very early in on this piece, and the Boland prospect occurs in broadacre farmland. So one of the challenges that we want to take on is trying to demonstrate to the community that we can integrate this with broadacre farming. So whilst it's not a barrier, we see it as an opportunity to generate some sustainability into our process and bring the community along with it. In terms of challenges, obviously going through the mining process or commercialization process from an exploration asset into mining, we need to tick off a number of boxes or a number of milestones. So obviously resource establishment is going to be the critical key, and then going through the DFS process. So what our barriers are is understanding how we define value in offtakes. So we're not talking about a gold asset where your commercial pathway is relatively simple. We need to understand how we can get those offtakes that best suit and enable us to future fund this asset. And that's what I see as being the biggest challenge. And it's probably been the biggest challenge for rare earth projects in Australia. So
okay,
we need to make that happen. We need to start having the right conversations with the right groups early, and hopefully, due to the geopolitical significance of these types of projects, that enables us to, or provides us access to that funding that's coming through to Australia through the IRA and from government funds. Look, I don't think we're at a position to receive those funds now, but hopefully in the future, as we progress and mature this project, we would be available for or open to some of that funding.
Yeah. Well, and we'll see. There seems to be more and more coming into market, but you've got to work out how to access it. So, if I'm clear on what you said today, is rare earths is the focus. You've got to raise some capital to kind of advance this thing for. I mean, I presume you're coming to market. When will you be announcing that? And how much would you be looking for? And again, based on what you told me today, you expect the market to react presumably positively. What do you think? What are the bits that they should actually be valuing? What's valuable to you, and what do you think the market should be valuing in terms of what you're proposing about the way you go forward?
Well, look, what's valuable in these results today is we're demonstrating positive recoveries. So the recoveries are occurring at an acid cost that is below a couple of bucks per tonne. And we've reported our acid consumption components because that's a significant part in the economic potential of ionic or clay-hosted rare earths. And whilst rare earths aren't rare, Matt, the right styles of mineralization to promote viable economics certainly are. So that's why we're so excited and we're positive about what we've discovered here. And the fact that we have the unique credential of ISR as our preferred mining method means that we cut out a lot of other costs. So we believe we're presenting something that is unique and has a lot of enablers. And because of that, we feel like we should be able to achieve the right amount of capital. So how much are we looking for in the short term? We have a budgeted work plan over the next 12 months that we would execute with about 1.3 million pounds, which would certainly fit within the realms of our current headroom. So what would that give us, and what would we expect to see at the end? We'd expect to be getting close to those pilot scale studies for ISR recovery, which would hopefully produce a carbonate for us from a marketing perspective. And we'd hopefully, well, I'm sure we'd be in a position where we'd be announcing a maiden Ionic rare earth resource.
Okay, yeah, but understood. So, like you say, rare earths aren't rare, but they're rarely economic. So, in terms of the way that you're approaching it, it's kind of quite interesting to me, because you seem to be cutting out some of the more expensive moving parts, certainly, and has been very expensive recently, like the chemicals side of things. So, interesting, Rupert. Really, really interesting. Tell you what. Let's stay in touch. Let us know how you get on. We will watch this story keenly. So I appreciate you coming on today. Thank you very much.
Thank you very much, Matt. Thanks for having me, and thanks for the chat.